Hey guys, today's video is aptly called, what the hell's going on with interest rates? You cannot watch the news or go on the internet right now without hearing about interest rates going up. So I wanted to give you a breakdown on what exactly is going on right now. In just a few days, mortgage rates spiked up to almost over 6% on most loans, all because of the inflation numbers that came out, which were much higher than expected. This on top of rates rising 2 points in a couple of months earlier this year. And there are two main reasons why this is happening. First, the Fed stopped their purchases of mortgage-backed securities and treasuries known as quantitative easing. This is what kept rates artificially low for over a decade after they implemented this because of the housing crash and the mortgage meltdown. And the other main reason is because of the crazy high inflation our country is experiencing right now. Inflation is the #1 rate killer there is because mortgages are bonds. They're pooled together into mortgage-backed securities and they're sold to investors. These investors receive income streams through the monthly payments, and when the cost of everything goes up, these payment streams are just not worth as much. So to combat this, higher interest rates are needed. The #1 thing the Fed has in its monetary policy toolbook to combat inflation is raising their Fed funds rate, also known as the overnight rate, which is the rate they lend to banks that lend to us as consumers for things like credit cards, car loans, home equity lines of credits, stuff like that. So it does not directly impact long-term rates like mortgages. However, it does influence them when the Fed raises or lowers their overnight rate. By raising this rate, the Fed is making credit more expensive, thus lowering the demand people will now spend. When demand for goods go down, so do prices, thus getting inflation down. Recently, the Fed just raised their rate by 75 basis points, which was the largest rate hike since 1994. And mortgage rates responded quite favorably to this. This was expected because of the high inflation numbers that came out, and the markets love giving them what is expected and keeping investors calm. But unfortunately, interest rates are extremely volatile right now, and they did give back some of the gains the next day after the Fed announced their 75% rate hike. So look, there's likely to be more inflation concerns happening this summer, so the Fed will need to do more to combat this, but the bottom line is that rates will eventually go back down. Exactly when? No one knows, but they don't go up and down in a straight line forever. Look, all markets, including real estate and stocks, have cycles. We've seen a decade plus of these markets going up, and it's now taking a breath, which is probably needed. And remember, the average mortgage interest rate since 1971 was 7.8%, and it's peaked at 19% in the early 80s because of the high inflation like we're seeing right now. So the bottom line is rates will eventually come back down again once this inflation has been tamed, and the Fed could step in and start buying mortgage-backed securities, which would really push them back down. So in my opinion, if you're a buyer, it's still a good time to buy. If you plan on staying in a home for the next 5 years and you are comfortable with that monthly payment. The housing market seems to be in good shape still because of the low supply. Yes, certainly has been a shift recently, but most experts are not predicting a crash and see modest appreciation in the forthcoming years like a normal real estate market does. Really, none of the dynamics that caused the last housing crash do we see right now, right? We had months and months of supply, toxic loan products that no longer exist, next to no demand and high unemployment. So is waiting to purchase the right thing to do? Well, look, there's no concrete answer to this, but if you're renting now, it's likely that rent will continue to go up. And when rates do come back down, which they will, you can certainly refinance into those lower rates if you qualify. Look, the market's very volatile, changes daily, so call us if you need any information on where the rates are at today. Thanks so much.